Morning, everybody. Welcome to Catalyst Q&A. We are into February now. We've just closed out the voting in Project Catalyst, so hope you all got in your vote submission. Anybody failed to hit the deadline? Did you all get your votes in this time?
No, I don't think I registered Maria's, which had a good couple of thousand in there, so I think we missed out on that one.
Oh, that was the wallet that you were going to vote with as well.
Yeah,
I didn't realize that. Okay. Yeah, so I managed to get it done, and actually that was pretty slick this time. Once you were in, and obviously got past registration from the 15th, then it was good to go. So actually that's another important date. So we've just had voting closed yesterday, and the results will be tallied and distributed on the 15th of Feb. So we've got a week or so to wait now till we get the results in, but they seem to be on top of everything, hitting the deadline, so things are going smoothly. Let me get some screen shares going, start looking at some bits. So actually, I'll jump around a little. So as we've started on Project Catalyst, this is an interesting thing that we did touch on last time around, last fund, but it's an additional tool that's being built out by Lido Nation. Darlington and the crew are doing a great job. And this tool lets you analyze how the results are going as the vote is ongoing. So I didn't spot it didn't think about it again until voting had ended, but it's just a very interesting place to come and see. So if you've got particular proposals that you were voting on or interested in, then you can come here and do some sort of analysis on how well your projects are doing, your teams are doing. So the key metric that we've got out of this is that on the left column, you've got a tally of all the votes cast so far. Previous funds, we've obviously had the upvote and the downvote, and so that tally was just the full figure of positive and negative votes altogether there. Now, of course, we don't have a downvote, we just have abstain, because we got rid of downvoting, which is a huge move forward. Really pleased about that. But of course, we still have a bit of obfuscation about the data, because we don't know how many of these votes in the tally are upvotes and how many are abstain, because you can actually submit an abstain, which gets recorded in the tally as well. So that helps to keep the data more anonymized, less easy to reverse engineer and figure out who's voting for what. But I imagine that less people will have used the abstain feature than were using the downvote, because there's no actual alteration to the outcome of the vote, whether you're using the abstain button or not. So this tally is probably more accurate in that there's these figures, particularly the top end, are probably like to have a lot more pure upvotes in them than being watered down by the abstain, and certainly no downvotes this time around. So interesting to go through and see. And of course, the large infrastructure budgets of $1 million ADA for this working group infrastructure that's being built out in Catalyst has got the most votes at 1910, which is good to see, because people are obviously voting in Catalyst, have an interest in how Catalyst is going to be run in the future, and how to improve and optimize on the procedures and the vote tallying and impact that we get out of those, out of the voting systems that we use. So second in the list is this alternative Catalyst voting scheme, which again is another research proposal to get together between the Catalyst team, IOD's researchers, academics, and FOTREC, which is a community-led group headed up by Dr. Kenrick over in the States, who is particularly interested in bringing in alternate voting schemes like quadratic voting. So we don't just have a pure plutocratic vote, where the more ADA you hold, the bigger your votes. You can actually start to bring it down into more one person, one vote, or these alternative schemes like quadratic voting, so diminishing the power of the largest wallets to help minimize the whale effect, or conviction voting, where you vote with a set amount of ADA and you have to apportion it to the vote to the projects that you like the most. And these sorts of voting schemes could really help to gather more decision making that is perceived by some to be fairer, but ultimately is producing better results, more accurate, and more representative choices. That's what we're after. So yeah, great to see these getting the most amounts of votes again. Of course, down in the depths there are some deeper down in the depths. There's some of the more high-profile projects out there on Cardano already, getting good amount of interest in their voting system, like Sunday Labs and a couple of new guys showing up as well. So Zerberus is a great team based out of the UK that do due diligence research, blockchain analysis on projects, and their data is now being fed into some of the launchpad platforms. So CoinNectar have paired up with them to actually get some real expert analysis of projects and their teams portrayed in token launchpads, so that you can gauge whether a project you're getting involved in investing in is actually worthwhile, or whether you're actually just FOMOing into something that's a shell. So that's great to see. And again, they did really well Fund 10. It looks like they've got some serious amount of votes in Fund 11 as well, so likely a positive outcome for them. Ncoins is a good, interesting project that I have touched on in the past, which is a privacy coin on Cardano that's not midnight, so it's not the large, pure, alternate blockchain that's coming out of IOG. This is actually built on and around existing technology on Cardano, but they're looking at creating the same kind of privacy maintaining aspects that Midnight are going for, but just using Cardano tech. So that's interesting to have that already up and running. And their token, incidentally, is doing well as well. So if you do like that idea, then you can participate in the growth of them as a team, as a project, by getting hold of their token on the exchanges as well. Aiken is an alternative programming language for producing smart contracts on Cardano, and again, getting high up in the vote tally. Iagon is the decentralized, well, quite centralized, but the alternative data storage model for Cardano, well, for blockchain really. So you can actually, instead of using what it would have been in the past, Amazon S3 for storing all your files and digital assets, or Google's Drive and associated products, you can actually have now a decentralized storage network. So anybody can spin up a node and earn from people storing their data on your drives. It's all encrypted and all managed by blockchain cryptography, but to make sure your files are secure. But it's coming out as a much cheaper storage method than is provided by the centralized entities, purely centralized entities like Amazon and Google. So that's an interesting model to take note of as well. But yeah, if you are interested in how your project is done, if you've got any that you're particularly watching, come in here. You can do a search filter on here and take the title from the project on IdeaScale or from Lido Nation in this proposal section. Drop it into the search and I'll turn up the proposals that you're looking for. Then you can start to see how many votes have been registered for it. And yeah, it's great just to have a quick nil analysis. And then down below, you've got more analysis, which we'll be filling in as the votes are tallied. So of the 4.5 billion ADA that actually registered to vote, we can see that, figure this out. I know I can't actually see how many actually did vote in the end, but there was so 56,000 valid registrations for people to vote. So that's a lot of people. And there were 307,000 votes cast. So the vote is being spread out. People are voting for multiple things, not just reading a single proposal and going after those voting rewards. They are actually looking a bit beyond a single vote, which is great. But yeah, I couldn't actually figure out how much of the registered vote actually did end up voting. Registered ADA, sorry, did end up voting for that. Yeah, that's not such an interesting metric. So yeah, this will fill out with full-on figures, votes cast breakdown, as the tallies come in. But, yeah, that'll happen over the next couple of weeks as the figures get released from Jormungandr and the Catalyst team. Any questions around Catalyst and this analysis, or questions on anything? Of course, remember you're free to interrupt me any point. So, yeah, Paul.
All good on that, Jonathan? Oh, yep, all good on that. Thank you.
Good, good. So the next thing I wanted to touch on is Axo Trade. So Axo Trade, which has been the most anticipated trading platform, I'd say on Cardano, but really, I mean, it's one of the most anticipated trading platforms in the DeFi space, is now on mainnet. So they've had their liquidity seeding event, and they're now seeded and up and running. The people who were early investors in the token have had that token distributed to them, and you can now see a more representative real valuation of their token on the back of their anticipation for their platform. And so, yeah, you can go and check tap tools as I often ask you to do if you want to see how tokens are doing it relative to each other. And Axo has jumped straight into the top 20. So they're sitting at 16 with a total market cap valuation of 29 million ADA already. So that's quite a high price, but their seeding event and the way that they launched the token actually is probably done quite well in terms of gauging the value, or the perception of the value of the token in people's minds. So it's currently sitting at 16 ADA per Axo, which is impressive. I haven't figured out the actual total liquidity, total volume of their token diluted when all the tokens are out and available, but yeah, that gives it a huge market cap from launch, which is exciting. But it's justified in terms of the technology and the platform they've produced, at least. So I wanted to highlight. I'm only starting to really learn what the differences are between this and the other exchanges that we've seen on Cardano and known and familiar with. But essentially, the exchanges we've had to date have been very much built in the mindset of the market-making exchanges we've had from the Ethereum space. So the way Uniswap, PancakeSwap, etc. have done it, this is how we've been building dexes on Cardano primarily. And we're now starting to see people who are building with the mindset of unspent transaction outputs. The model that's used to bookkeep on Bitcoin is the same model that's used on Cardano, but it's been extended with additional features. Bitcoin doesn't have exchanges because or smart contracts to do more complex trading methods in it, other than through a centralized exchange, whereas Cardano does have that, so it's able to do DeFi products like this that are actually analogous with the centralized exchanges and the way they work, but is working in a decentralized method. And so on here, you've actually got a strategy that may be built into a market maker on MusicSwap, on Wing Riders, but it's being built here in a way that's advantageous for leveraging the unspent transaction outputs. And you can actually see how to put together strategies of the market makers in the open. So the way that these are built on the other exchanges is kind of hidden. You don't get to see how it's implemented unless you are a full-blown Haskell developer or something. You can go into the smart contracts if they are open source, which most of them aren't, and actually read and understand them. Here you don't have open source contracts, but you do have transparency into the maths and mechanics of how the strategies are being built. So on the trading side of things, you can see, like, this is a token valuation here of Axo against ADA. On their markets page, on the homepage, you can see the tokens price. if you open each token up, you can see the top strategies that are being used to trade that token. So they've got a box top market maker and a spread market maker, which is all kind of foreign to you. But actually, these are the market making models that are used in swaps on the other exchanges as well. They're just not exposed like this. And they're exposed like this, same for the token pairs, because you can actually go in and become a liquidity provider on those strategies. So instead of just being able to provide liquidity on the other exchanges with a single strategy and not having any control over the parameters, on Axo, you can actually go in, create your own copy of those market making bots, and alter the figures, tweak the figures to suit the way that you want to provide liquidity to the market. So absolutely empowering and fascinating way of approaching the build of a DEX. And all these strategies, algorithms are available to any to jump in, to alter, to adopt and use, and it makes for a really competitive exchange. And we're likely to see very, very different flows of trade and trading coming out of here as a result, because they're not just all determined by the 4 or 5 dictators out there. And now they've got hundreds of people throughout Cardano actually creating their own strategies and making them open to be used in and around the space. So you can see here how to actually add liquidity to one of these strategies, or you can go in and read up about the strategy itself and then make tweaks to it. And of course, once it's here and available, you could actually go in and write your own and modify it. I've come into the wrong place. I want to see the algorithm side of things. So if we look just at the market making, the spread market maker, it can show you exactly what's happening. So you've got sort of query languages here that are describing the functionality, and a diagram of how the flow all fits together. So effectively, you've got the market price of the tokens, one token on the left of the pairing, one token on the right. So ADA and AXO, for example. And as a market maker, what you can do is say, I'm going to provide these 2 tokens, and I want to fulfill this strategy using these 2 tokens. And in the strategy, I'm going to buy ADA just below market value, and offer it to sell as AXO at above market value, or vice versa, and any parameter of those, any variation of those parameters. And then when people come to actually make larger trades, they will have trades already open, orders already open in the book that can fulfill the trade they want to make. So I want to come in as a retailer and buy a whole load of AXO. Then the market maker will be there, having placed trades already using your liquidity funds to actually fulfill those trades. And as a result, you'll get a portion of the spread given to you as a market maker. So you've seen on centralized exchanges, the spread, the price between the bid and the ask price. Well, that's actually what's been designed here. And you can claim the spread. So effectively, you are becoming the centralized exchange. Whereas in something like foreign exchange markets, the broker that you're using, Oanda or Binance have got one. I'm brain fading at the moment. Some of the big exchanges, OKX, and all these guys have got big exchanges. They've got a whole load of token pairs on there, but they are controlling the spread of those tokens throughout the day. The spread changes to match when they're wanting to be making more money or less money, when there's higher risk or lower risk, and they're controlling all that. Well, here you're put in the driving seat, and you can control these strategies. What happens when, how much the spread is, and you're competing with every other market maker out there. So it'll make it for a really efficient market, and efficient market makers, because they're all competing with each other to provide the best price. So the retailer wins, you can play the market maker and win, and it's just making every aspect of the whole exchange program efficient for the parties involved, which is really cool with no middlemen. So it's all public accessible to you wherever you want to jump in, get involved. So really, really exciting to see this. Axo Trade is going to be the standard now for dexes, I think, on Cardano, because it's got this decentralized approach. It's got the full leveraging of the UTXO, and it's got this open, anybody can participate in that whole proceedings in whichever suits and sits best for them. So very exciting. And of course, the Axo tokens might not be a bad one to get involved in at some point. So the price is probably a little inflated at the minute because they've had the launch, and everybody's very excited and bullish about it. But you can go in, decent analysis on third-party platforms as well as their own to see how that price action has gone. And yeah, I must say I got involved in a little trade last couple of days and made 40% on the token, just trading into Axo and out again. So yeah, that was a very nice little experience. And I used I didn't use the market making approach or anything like that yet, but I will definitely be trying that out in moments to come, because that looks like something I want to get involved with. I'm providing liquidity on other pools and doing yield farming, but I want to get my hands-on experience with Axo because I'm fascinated by it. It's really interesting. Got any questions around that?
What did it jump up to at the peak? Because it was like it was up to 48 or something. I couldn't see it as the screen was too small, Jonathan.
Yeah, so at launch it hit some crazy valuations. Like in the seeding event, someone had put a trade on for 50,000 ADA for a single Axo. So this is a figure that you can just ignore. I think that's sitting at 397 ADA for the token, which is just a ludicrous valuation. There would be trillions just in the market cap of Axo. So ignore that huge candle at the start, and then just look at recent price movement. So yeah, that's probably more accurate. So it did jump up to 28 here, 26, 28, 26, and over here. That was 26.45, yeah, which is amazing. Currently sitting at 16 ADA, and a low of 4.8. So yeah, if you can get in anywhere around the 10 ADA mark, I think you're probably onto a good place. And this, all tokens are subject to pumps and dumps. So where this is going to go from here, I don't know. I mean, the market cap and the valuation of the token as a whole is pretty huge already for a token that's just launched. So whether that's inflated or not, it's very hard to say. But yeah, I'm not willing to sit in that token at the moment, but we'll be looking for buying opportunities in the future. And don't mind trading in out of it. Yeah.
So would the current, obviously the increase in ADA prices, because it has jumped about, I think I saw about 5, nearly 6%. Would that have an impact on this?
In the scheme of things, yeah, certainly it has a massive impact in compared to if you're getting back out into fiat currencies, pound and the dollar, euro, and Aussie dollar, New Zealand dollar. But these, the impact on Axo to ADA won't be impacted by the price of ADA. So, of course, as over time, as the ADA valuation goes up, then that attracts more and more people into ADA, which then makes the valuation of all the native tokens on Cardano go up as well. And they go up more than ADA because the market cap on these is tiny. And as the ADA valuation grows more and more, the larger the market for ADA, and all of them are tied to ADA in some way, shape, or form, then that grows more rapidly because they're started smaller. But yeah, in terms of getting back to dollars, and the rise of value of ADA helps you out in your native tokens as well, but not in terms of ADA. Everything evaluates back to the price of ADA when you're staying within Cardano. If that makes sense, or I might have labored that a bit too much. But yeah, certainly if you're looking to get, if you're looking for cash flow strategies from crypto to get it back out into your spendable dollars, then yeah, keep an eye on the price of ADA when you're valuing native tokens as well, because that does make a big impact. And in fact, I did do a bit of a breakdown analysis on some of my tokens from when I bought into them and what they are now in recent times with this latest pump. And some of them have jumped 200, 300. I think the lines was 1,900% since getting into tokens. So and I go into these with like £5 or something. So I'm not retiring just yet, but it shows you the price movements from these tiny cap coins and where they can go over time. But of course, looking at the price of ADA and valuation of ADA is the best way to gauge how you're doing against the real world, because ADA again moves in line with Bitcoin, and Bitcoin moves in line with, contrary to US dollar. And that's really where you're doing your comparisons. Look at the valuation of your ADA or Bitcoin against the dollar to really see how well you're doing in crypto, because you have to get everything back to those currencies still, to the dollar, to really buy things in stores. Once that starts to change, we get cash points, tills, points of sale, actually accepting Bitcoin, Cardano, AXO, and that's when we'll never have to leave these native tokens, and so the valuation of dollar against these doesn't matter then, but currently it does, because you have to get back to dollars to buy and sell anything. Cool. Do jump in with any questions that you want to. And that is AXO, and one to definitely keep an eye on. So looking at the state of play of things, there was a really interesting reminder of an article on a tweet this week from Eric Voorhees, pointing back to the Declaration of the Independence of Cyberspace from one of the founders of the Electronic Freedom Foundation. So this dates back to 1996, I think it is, looking at the difference of the impact on the world that the growth of cyberspace will really have. So taking what we established as the norm in the physical world and how we map cyberspace over the top of that. So where we have institutions of power in our day-to-day lives that govern us, that charge us taxes, that determine where we can buy and sell. We have nations placing sanctions against other nations. All of that is being blown apart by the rise of the internet, by the rise of cyberspace and societies within cyberspace that aren't defined by geographical boundaries. And now with the rise of Bitcoin, and Bitcoin's 15 years old now. It's incredible. I think it's that old, but also that young, the impact it's having. But having that financial layer now on top of cyberspace really means that the whole of society can restructure itself. We aren't stuck within our nations. People on this call alone are from other ends of the world, and we're interacting with each other. We're forming community. We are trading with each other, and we're participating in cyberspace for our entire, pretty much our entire relationship. I have physically met the two of you, but that's beside the point. this is a new power, and so this article goes into what its vision of the future is, how it will break apart the society structures that we have currently, in 1996, and it's really starting to look very good in the scheme of things, in terms of a historical written piece. So I'd encourage you to go and read that, and get some meat out of it. There are lots of things that it can take you into researching as well, in terms of growing how you think about the world. One of the bits I like in particular was I read it and I hadn't picked up on one phrase in here, which was the golden rule. I mentioned here. For golden rule, what's that talking about? So I went and researched what the golden rule is, and it's basically do unto others as you have do unto yourself, which I think of from the Christian Bible, but actually it's been part of almost all religions and philosophies in all different cultures for as long as man's written things down. And it's about treating others like you'd want to be treated, whether that's your neighbor, your enemy. Think about how you treat others, how you want them to treat you, and bring some parity in that. And so this article just leads you down all those sorts of research topics and gets you thinking about things beyond what is the norm, or what you've been raised as being the norm. So fascinating piece. Encourage you to go read it. They'll put all these links, of course, onto the Discord, so you can jump and find them all afterwards. But yeah, fascinating stuff. And that's really sort of the heady the heady part of what we're doing in this space. It's about changing things beyond just cash and the way it's spent and used, but going into some real philosophical stuff. Makes you evaluate yourself and your thoughts and the way you think about the world. But of course, we're also here to do taxes as well. So, currently in the systems that we're in, the crypto space is not really well managed in terms of chasing down tax, and the tools out there are sparse and not so well proposed. But now we've got tools growing, and tap tools, which I've been talking about and referencing every week in these calls, have released their tax solution, which looks really comprehensive, really good. It's a paid solution, so good to see them forming ways of producing revenue from their platform, which they've offered the bulk of for free for so long. But as we actually start to get chased down by the governments that we are beholden to for making accurate reporting of our tax status and on the assets we hold, these tools are going to be invaluable in justifying defending yourself if you do ever get audited, and in preparing reports to pay the tax that you need to pay for the bridges, schools and roads around you. But if you come to here, this video is a little bit promotional work on what they're offering actually in this tool. And they also have this view samples thing, so you can actually download and have a look at the data that you're getting out of it and the format that it comes in. So they are offering a spreadsheet, a CSV export of the data. So you can see here, this is sample data that they've got in one of their reports. This is the wallet profit and loss. So you can actually pick one of your wallets and analyze it or extract the data from it into a spreadsheet format, giving you figures on how much profit and loss you've made on those individual trades, tokens, airdrops, etc. And so really valuable information for when you're preparing your tax return, or to provide to your accountant. That's great. And the amount of varying reports that they're giving you out of the box is really fascinating. So And we've got, you can see that on my small screen, wallet airdrop rewards, break it down by wallet income, wallet lending and borrowing, profit and loss tax for the tax account. Then it's got some for individual software packages like TurboTax is catered for. You've got your staking rewards can be separated out. Your synthetics, your collateralized debt positions, if you're into synthetic assets like IUSD, the synthetic stablecoin on Cardano, and your NFT trading even, and all the tokens. So it can really do a full deep dive analysis of your assets, whether they are fungible tokens, non-fungible tokens, how you've been interacting with these platforms in terms of lending, borrowing, or trading, or airdrops, or staking, and produce tax reports on the back of them. So you'll be able to do full-blown tax reporting, which is a necessary evil in the space still. And maybe at some point in the future, this, all this funding for infrastructure in our geographical locations can actually come from come from source. So there'll be a way in the future for the blockchains themselves to be contributing to localized infrastructure providers in a way that pays for the world to be run, rather than us having to have our governments come and chase us down for these things. I'd love for this just to go as a headache for humanity on an individual basis, or company basis. Let's just do it straight from the financial layer itself. At the moment, the government prints taxes, which affects how valuable the price of the value of the token is in your pocket, the dollar is in your pocket, and they take it from how much you earn. And really, those things are so uncorrelated and have got so many gaps in them that you can't tell when you're being fleeced. And we are being fleeced. We're not getting the value we should be getting out from our tax dollars. The roads in the UK are pretty awful in several places, and the drainage is a problem in lots of places. I know that's the same in New Zealand. These infrastructure projects that do need funding are not being funded or made efficient by the way that they're being run at the moment. So that can be improved upon, I'm sure, and certainly need to be if we're going to move ourselves from the people that we see ourselves as now to the future that we've got written about in sci-fi. But yeah, okay, that's tax at its most exciting.
So
Yeah,
once you've bought the app, as it works, obviously it's a buy now tab there. It's just a case of connecting your wallet and it spits it all out, Jonathan.
exactly. Yeah. So you can connect, if you've got multiple wallets, you can connect them all at once. It will do an analysis across your wallets, try and get its head around all the transfers between wallets and things like that, and actually, extract or ignore the inter-wallet exchanges, from yourself to yourself, and just account for trades. So, you are supposed to be taxed on every time a token is exchanged from one to another, and so it can produce figures on those for you. And it's like an annual subscription, so you pay like $150 or something for the year, $200 for the year, and you get access to the platform for the full year. Or you can have a deeper dive with the business package. I'm not sure what the differences are in terms of reporting. I guess this is just more suitable for corporate accounts. This is more suitable for individual tax accounts. So I'm going to go about it. Now, incidentally, this team always promised additional utility from their NFTs that they've used to raise funds. And so if you bought into their Tappy NFT, that gives you access to the pro features on this platform, and also a discount on their their tap tax packages as well. So for the individual plan, you get $50 off if you're a Tappy holder. So you can go and evaluate whether going buying a tappy on the second-hand market is worthwhile to you, bearing in mind you might need this as a tax tool each year from now on. So yeah, do check it out, see if it fits your needs, and yeah, it's an interesting, another really good, interesting addition to the space. Of course, there are other platforms that do the job already, certainly maybe on wider chains that you're interacting with. So Coinly and CoinTracker, CoinStats all provide tax analysis and reports as well. But this one is the most comprehensive that I've seen in terms of transactions on the Cardano blockchain. Certainly, the other platforms you tend to have to import or export from your wallet all your transactions, and then they bring them into those tax platforms. Then you have to do a lot of manual analysis yourself to determine what category they should fall under, whether they're as income, as revenue, or airdrops, because each of these will be taxed in different ways in your respective countries. The capital gains is a different set of rules in one country to, from New Zealand to the UK, I'm sure, and the same for whether it's revenue from business activity. Earning as a state pool is it's business revenue. Staking is like interest in the bank, and all of these have different tax implications as well. So yeah, it'll really help ease the pain of getting accurate figures out from your assets. Yeah, one to have a look at as well. That's useful. Good. Okay. Another thing to look at that's exciting for that I find exciting anyway is MuesliSwap, which is the oldest decentralized exchange on Cardano. Their team always seems to build in silence and then come up with a big flagship product that nobody was expecting from them. And so they're making the kind of radical move, in my mind, from being a privatized enterprise into handing over governance of their operations to a DAO. So they really want you as an investor, as an interested party in their decentralized exchange and all the tools they're building out, whether that is their synthetics or their they're doing derivatives, sorry, not synthetics, and are offering lending and borrowing in the future, as well as their trading platform, their decentralized exchange. And for all that activity to then be managed and governed by a DAO is a really good step forward in my mind. So I'm excited that they are taking this step. And it seems that it was always on their plan to do, they just haven't verbalized it so loudly today. So now there's this nice article from them that details how they had a proposal in Fund 10 of Project Catalyst to actually fund the work in documenting and getting the tools built to actually start running themselves under this governance system, so that they'll have a voting platform that you can come in, and if you're a milk token holder, you can then participate in the decision making for where the direction that the team go in what they're building, and how the parameters for all their revenue streams are set. So that's a really exciting move forward, and this is all what we talk about in terms of decentralization. This is again the sort of thing that we want to see happen. So decentralization means removing the center from any organization, from every large corporate, large enterprise, and this can work at a small scale up to a large scale as well. If you are really running and holding true to the decentralized vision of the future, then you are distributing your decision making to multiple parties. You are distributing your redundancy, your resiliency, your backups into multiple parties. You are making your operations resistant to coercion, corruption, and attack by running in a decentralized distributed mechanism, and that sort of ethos, that philosophy, can filter down into the tools that we use, the money systems that we exist from, and apply to all areas of our decision making and management. So instead of handing all your data over to Google and Amazon and Netflix and Microsoft, you can actually keep hold of that data yourself and allow it to be where you decide where it's allowed to be used or leveraged to give you access to features that aren't controlled by a single entity, but are controlled by a community of decision makers, like in a decentralized autonomous organization. And so if you can replace Google with a DAO, suddenly you've got a large entity that's providing most of the tech that we use day to day in the world, that's not being run by a couple of guys on a board that holding only to shareholders, but actually it's run by the people who are using the product itself. And that's a step forward in terms of making sure the product stays fair and not evil, and is working for public good rather than private gain, purely for private gain. So yeah, everything should go to a DAO in my mind, but this is an interesting development from the MusicSwap team. Great to see.
So, Jonathan, is it worth claiming your milk tokens?
Yeah, certainly. And in fact, one thing I spotted, I don't know, and it's sort of happened at the launch of this paper, so I don't know whether it's correlated, but one of the mechanisms that they use to slow the movement of value from their exchange is by offering this staking locking mechanism for your M-Yield tokens. So if you're participating in liquidity provision on the MusicSwap exchange, you're offering a token pair and earning trading fees and then yield farming as well, you're rewarded for that activity by being given M-Yield, which is one of the MusicSwap tokens. If you decide to stake that M-Yield for 30 days, then you're given a voucher which is worth more in terms of milk than the M-Yield that you're given initially. So you're rewarded again for spending or leaving your assets locked up in their platform for 30 days. Now, as a result of some change that they've made, actually at the moment you can go in and redeem your M-Yield without waiting that 30 days. So it's I'm hoping it's a feature, not a bug. Certainly it's worked perfectly, restricting you to 30 days up until this point, and now it's opened up. So in correlation with this paper being released, so I don't know whether I haven't heard from their lips that that's what they're doing, one of the things they've done, but certainly if you are providing liquidity on MusicSwap and have M-Yield tokens, you can go to the earnings section, M-Yield, and if you've locked up any of your tokens here for 30 days, all of them suddenly, yesterday, today, haven't had that 30-day restriction on them anymore. So you could convert them into M vouchers straight away.
Just jumping in, sorry, Jonathan. Just a quick one on that. If I do and I did lock it up, if it ran the 30 days, would it then recycle again for another 30 days? Or would you have had to have claimed at that 30-day point and that's it? Or does it just keep on rolling over?
It just sits there. So you don't have to claim it after 30 days. You can leave it there if you want. But what it does is it becomes transformable. So once it's been in there for 30 days, then you can transform it into M vouchers. And so you could do that at any point. If you only come back every quarter, you can come back and transform them all after 90 days if you wanted to. But yeah, the minute 30 days is a minimum. There's no additional benefit after that 30 days, so you might as well do it. But yeah, you're not penalized for leaving it longer. There's no advantage leaving it longer. So yeah, just down to your time management pretty much. And so what you do is once it's become transformable, you can exchange it for M vouchers. So 100 M-Yield will get you one M voucher. and that M voucher is like an option, a derivative of their milk token. So you can always exchange your M vouchers for 1 milk at the price of 1 ADA. So depending on where the valuation of milk is to ADA, you can sort of hedge your position in milk tokens by using M vouchers. What I do is I treat all the earnings from this as a sort of cash flow, as contributing to my cash flow. So I will transform my M yield into M voucher, and then over the next week or two, well, up to a month really, I will look for the best price of ADA against milk that I think we're going to achieve, and try and then exchange my M voucher for milk, and swap my milk for ADA, because obviously I treat ADA as my sort of foundational asset, as the large store of my portfolio, and these more risky tokens like milk, like M yield, like M voucher, I try and exchange them all ultimately back down into ADA, so that the bulk of my portfolio is stored in the most stable in this space token, which is ADA itself, rather than in the smaller cap native tokens. But you can obviously earn a lot more from participating in the small cap coins. So yeah, that's my approach. Good. So that's the Musi swap. Always keeping you on your toes, doing things differently, which is good to see. While we're on Medium, the blog aggregator, some updates from Machiavellic have been happening this last month. So this post is very cool. It's sort of written like a lot of their lore of the game is written in a kind of as though you're listening to the narrator in Lord of the Rings or something. I really like the way they write. And the mixed in amongst this post, which is written in that style, are some more of their graphic assets for the game coming up, and hints and details on how the game will work. Parts of the user interface are being released to us over time, so this will be how you connect your wallet to the game. And interestingly, they do talk about being multi-chain, so they are doing a lot of their marketing activity on the Wax chain as well, by using FGL, which is a large game provider. The Wax chain is a sort of Ethereum clone with very low fees, I believe. Excuse me if I speak out of turn. I don't do much about other chains, but I have participated a little on that, and it looks good, legit. They have also got in here what I thought was interesting. I think it's in this post. I want to show you some graphics on there. I love this piece. It's very cool. I got a little video on some of the actual 3D models they've got in the 3D parts of the game. So that's looking really cool. So it makes me excited for the game release, which isn't likely to be very, very soon, but these bits they keep dripping out to us look great. And they have got, they had a slew more proposals in Fund 11, looking for a bit more funds for their build, which they got my vote for. And they're now partnering with Wild State Studios to grow their development capacity. So they probably need some more funds for that as well. But yeah, an interesting read, and great to see where they're going. They did, incidentally, just an indicator of the appetite for this project. They did a token launch, an NFT drop, a purchase, a sale yesterday, and it was open for about an hour and then sold out. So I had planned to participate. Someone called me with a work call, and I was distracted and by the time I got off the call, it sold out. So they do have a lot of attention. Their marketing is working, and makes me excited for the future. So the MAC tokens that you were able to claim as a delegated to Fluid Pool in the past, they are hopefully going to boil out to being a useful, valuable asset, because that's the main token for use in the game. Another blog post here, which is not written in the what's the word I'm looking for? The narrative that's common to their game lore, but it's actually written as a human. It's a normal human. Is going through some of the features of the game and how it's interacting with the blockchain, and why gaming is such a big industry, and how blockchain can really be used to improve and unchain the value that's generated within the gaming industry into the hands of the individual. So again, decentralizing the wealth generation, the revenue creation that is being siloed in centralized game entities at the moment, how that can really be filtered down into the hands of the players. If you've built up 60 hours of gameplay in a game, then you've committed a chunk of your life into it, and generated some value in terms of character creation, some scoreboards, and the assets that you used and interacted with. All those really should give you some value as an individual player, because you can actually, they're asking you to spend your time buying the game, spend your money buying the game, some time interacting in the game to actually grow that environment, and so you should be rewarded for that, because that's the way that brands work in the real world with clothes. You're rewarded with social status if you have certain brands, if you're of that kind of in that kind of society. So the same can be done for gamers, and they thoroughly believe in that philosophy, and they're looking at how to leverage the blockchain and the storage layer of value in terms of the gaming industry. So a really good piece to read as well if you are an investor in the Machiavellic game. Good. Again, interrupt me if you've got any questions. So I think that might have been all my prepared pieces for today. So I'll open it up for any general questions on anything you're working on at the moment, anything you're struggling with, anything you're interested in. Please do ask. We've got another 15, 20 minutes that I'm happy to carry on for.
I think I'll put in Fluid 7 about obviously bringing people into the pool and how they can convert from their non-functional pool to Fluid 7.
So I haven't seen that yet. Is that in the Discord? Thank you for that. Appreciate it. So yeah, people can delegate to Fluid Pool very easily, very straightforward. There's lots of places to do it now, because the problem with the staking mechanism on Cardano is that what's proving out to be is quite a sticky place. So people tend to delegate to a stake pool. They're assured of getting rewards so long as that stake pool operates effectively. But because it's auto compounding, doesn't really need you to get involved on a day-to-day basis, a week-to-week, month-to-month basis. People don't get involved on a year-to-year basis, and the stake pool operators do have to stay on top of their operations to stay healthy and maintain the network infrastructure. And because all of the assurance of validity of the blockchain is reliant on the good operation of the stake pool operators, and that is only assured by people who stake their ADA actually staking it to the good operators on the network. So that's what you're doing by participating in a proof of stake blockchain, is you're deciding who's a good operator for running the infrastructure, and you decide that and cast your vote by delegating to that stake pool provider. And so you've got to think of it as a healthy maintenance task every now and then to look at your stake pool operator. Are they doing a good job? Are they being allowed to mint blocks? And if that's the case, then you can delegate to their pool and you're helping to maintain the health of the network. If you don't do that and just walk away for 4 years and come back the next bull run, in the meantime, your pool could have gone to the wall or not maintained its role, its tasks that need to be done as a stake pool provider. And so what you can end up seeing is a whole load of stake ending up in dead pools. Now, somewhere off here, there is a way to see dead pools. I can't actually remember how to get to this one. So here you can see a list of all the retired stake pools on Cardano. So obviously, if you're running a stake pool, you're paying for infrastructure, you're paying for servers, computers, you're spending time maintaining them or paying someone to maintain them, for doing security patches and making sure that your infrastructure is got drive space that it needs, etc., etc. And because there's that cost, there is an attrition, a sort of churn in stake pool operators. Some can't afford to run anymore. Some don't see it's worthwhile, and so they will retire their pools. And so this is a list of all the retired pools in the history of Cardano. And there's a lot. There are currently about 3,000 operators on the network, and almost as many have retired in the time that we've been up and running. So all these pools, 2,500 of them, are retired, and a lot of them still have ADA staked to them. And so the ADA that's staked to these retired pools is not earning rewards, and it's not contributing to that decision-making mechanism of keeping a healthy chain by deciding where you stake. So it's causing a problem on the network. It's not causing a problem at the moment, but if it continues in this way, that the stake comes in and then just sits in retired pools, or sits in a pool until it retires or starts to non-function, then the number of pools that are actually validating blocks, are doing their job and maintaining a healthy network will diminish as a proportion to the whole. And so the security stability of the chain is impacted by it. So if you are a delegator, then you have to evaluate who you're delegating to, who you're staking with, and adjust that every now and then. So make sure I'm still alive, I haven't fallen off a cliff and my pool's ended up not rotating its KES keys and stop minting blocks. That's something you do need to check on every few months. And there are a lot of people not doing that in the Cardano ecosystem. So we need ways of getting the stake that's tied up in these retired pools or misbehaving pools. We need to find a way to get them back into get that ADA back into circulation and stakes to good pools, because that's the design mechanism that we have to hold to if we're going to have a successful network. So yeah, if you know anybody that stakes to a dead pool, tell them to stake with fluid pool. That's what I want.
Can they go? Can they go back into those dead pools and obviously pull the ADA?
Yeah, absolutely. So you're in control of your stake. At any point in time, you can change who you're staked to and move it around. So this is on the test network at the moment. It's on pre-prod. So I can take this wallet, and it is currently staked with Xylobyte's pool. So for example, if this pool had stopped minting blocks, which actually it looks like it has, I can make a decision. Okay, stop minting blocks. Maybe there's an issue with it, or maybe it's retiring, or it's not paying its hosting fees. So I'm actually going to redelegate. So at any point in time, you can use your wallet to change who you're staked with. And it's not, you're not stuck with the pool. The pool doesn't have any control over your stake. It's in your hands. So I could say, let's go and find NB pool and let's delegate to them instead. And so you have that power to then change who you're staked with. You've made your vote, you've made your decision. I'm moving my ADA from this pool to another. And that's a fine and courageous act to take every now and then. So do look, keep an eye. But obviously if someone's doing a good job, then keep staking with them. Yeah, and then Xylobyte's actually doing a good job, so I'm going to stay there. It's on pre-pod, doesn't really make a difference to him financially anyway, but yeah, that's the example. So yeah, good question. Thanks, Paul. Good. Anything else you want to recap or cover?
Yeah, I do have a question, Jonathan. Apology if this question has been answered. You probably even addressed already. It's regarding, I'm thinking about using ADA for my what do you call cash flow. So in the sense that I want to trade, because obviously in bull run, buy and sell sort of thing. Is there any sort of do I need? Do I need to use one of those, like centralized exchange like Kraken, or or do you have some sort of any tool out there where you can just buy and sell ADA and make and generate some cash flow?
Yeah. Cash flow on different ways. The ones that are easiest to see are excuse me are on the decentralized exchanges. So the earning mechanisms in these are by providing liquidity. So well, that's one of the earning mechanisms. Obviously, you can just do things like staking as well. Let's see what we've got here. So this wallet is my one of my wallets, and it's staked fluid pool. So that's one way of generating cash flows, just by earning that 3.5% APR. So you're getting some interest on your ADA that you hold by staking. That's the first thing you should get done. Then it's about looking at smaller cap tokens in Cardano and saying, how can I get involved in earning from those trades that are going on. I could either be a trader, so I could look at, for example, I bought some AXO this week and then sold it back to ADA a couple of days later and made some ADA that way. And that's just by trading. So you can carry out swaps on these platforms doing that. Buy some ADA, trade it. You can, you know how to trade, having been in Luca's school. These are trading view windows that you can then decide when's a good time to buy or sell. So Milk Tokens price is very depressed at the moment. Might be a buying opportunity there. But if you don't want to trust your trading skills, you can actually instead just say, I want to buy some tokens that I think have got long-term future, and pair it with ADA and then provide liquidity to exchange. And that's a very good way of creating income without having to be on top of market price movements, because you can buy 2 tokens, put them into a pool, and then generate an earning from that is distributed daily, minute by minute. So whether I have anything going on here, I don't think I do actually. Might have something on MinSwap, which is another exchange, another centralized exchange. So you could have a look at MinSwap. You can come into their liquidity section, find some tokens that are are ones that you're happy with. So we're just looking at AXO. I don't know if they've got a pool on it yet, probably not, a bit young. But for example, you go for IUSD, for example, that's a pegged, the price of that value of that token is pegged to the dollar. So effectively you've got a dollar ADA token pair there. So you're happy to hold dollars, you're happy to hold ADA. That might be a good one to consider, provide some liquidity on that token pair, and then you will earn the trading fees, a portion of the trading fees. So 3.1% of the trading fees gets distributed to anybody that's providing liquidity on the IUSD ADA pair. And then once you are providing liquidity like that and earning some of the trading fees, you could then decide to take it a step further and actually stake those liquidity pool tokens that you get in a farm, and then you'd be earning interest in this. So like in this one, I've got some FLDT tokens, and they are distributing rewards in terms of 28.48% of the FLD token, APR wise, that is being distributed to people who yield farm on here. And that's on top of your trading fees at 3.1%. And then you've got your, sorry, let's go back to the IUSD pair. And then you've got your other tokens that you may be able to get as well. So on this one, you've got MIN tokens, ADA, and FLDT that you're earning. So all these are being distributed to you or made available to claim, to harvest on a daily basis. And you could then decide how often it's worthwhile going and harvesting those rewards. But you can harvest those back to FLDT, MIN, ADA in this case, or IUSD and ADA and the other token pair. And then swap those back to ADA on the exchange. So this is all decentralized stuff we're talking about. So you'll take your, say your FLDT, which you've earned. You would swap that back into ADA. So if I had earned 20 FLDT, that'll give me 12 ADA. So you might wait until you've got 200 FLDT, and then you've got 120 ADA, which is about $65 or 50 quid. And then you could swap that back into dollars. So swap that back into ADA, and then you'll take your ADA out of the DeFi space where you've made the earnings, send it to your Kraken wallet, for example. So in your wallet, you've got swing swaps back into ADA. So it's now sitting in your ADA balance, so that you could take that ADA, you would send it to Kraken. So you could get your receive address from your Kraken platform, paste it into here, send that 50 or 200 ADA rewards, send that to Kraken. And then on Kraken, you would exchange your ADA into dollars or into British pounds in your case. And then from Kraken, you'd send it back to your bank account, and then you could spend it. And so that's a cash flow strategy, because you're not giving up your capital. You've bought 2 tokens. You're still maintaining the balance of that. There is some slight impermanent loss on those, depending on which pairs you pick. But if you're selecting them like IUSD and ADA, unless there's a big problem with one of those tokens, IUSD, it's not going to impact the price movement too much. You're happy to hold both those tokens. You're an investor in those tokens, but actually you can earn additional revenues on top of those tokens by doing liquidity provision and yield farming. You can take that portion, those little extra earnings, out, take them through Kraken back to your bank account, and that's then cash flow that's coming into your portfolio that you can either spend on toffees or you could reinvest elsewhere. But you've maintained the same amount of your actual capital that you've invested all the way through. And so that's a strategy that's sort of cash flow rather than capital growth. And does that answer your question?
Yes, it does, Donovan. Did you say FDA? you showed me some, because obviously I don't really at this stage, because for cash flow, I want that to be ideally picked or either actually USD or GBP, like sort of thing. So why did you suggest FDA? I think is that token that you suggested earlier? If is that because of a high APR or why that's
Good question. So yeah, it doesn't matter in terms of what you're hoping to end up with. So if you're wanting to end up with British pounds, to get from your yield farm to your British pounds, you've got to do lots of swaps. So you've got to exchange your token for others to get that flow going. So the starting point doesn't really matter. There is no synthetic British pound on Cardano to date that I know of. And there's no mechanism for earning British pounds on Cardano. There's only a method for earning some of these native tokens. So whether that is IUSD, which is pegged to the dollar, so its valuation is tied to the dollar, or a more volatile coin like FLDT, which is just got its valuation in correlation with ADA, or in contrast to ADA. So it doesn't matter which token pair you choose. You can just look for the highest APR, the token that you're most comfortable with. So you need to do a bit of research on which tokens you like. So, for example, on here you might go to the farm of liquidity pools. So you go to here. Well, actually, no, you would look on farms. But you can, if I take that filter off, you can look here and say, these are the sort of APR figures that you're getting out of them. Let's switch that view to this. So then you can look down this list and say, what sort of APR am I looking to get in on? What excites me? I mean, from the bank, you're getting what, 2.5%, 3%. Here you can get 87% APR. What's that token about? And you could have a look and say it's broken down. I'll get 86% of that in Wolf tokens. So what's the Wolf token? Am I at risk by providing liquidity on this Wolf token? And I think if you actually look into the Wolf token, it's actually a meme coin released by what's his called? Frog and Wolf stake pools, which is run by one guy, an OG in the space. He has released tokens, and he has got lots of other projects that he's working and building on and involved in, teams that he's involved in. But his Wolf and his Wolf token, I don't think has any particular utility. So whether you want to invest in a meme coin, just an interesting experiment in tokenomics, do you think that's worthwhile investing? Is it a risk? Is the valuation of Wolf to ADA going to drop massively and so leave you in impermanent loss? Quite possibly. But you're getting 87% APR, off the back of it. So you need to do some research on the token pairs that you're actually looking into. Again, that's where Tap Tools is a great platform to come and look. So you can say, let's have a look a bit of research on Wolf token. The things you might be looking at are risk factors for that token. If it's got a very small market cap, then it doesn't provide a very safe haven in terms of lots of people invested in it, holding lots of the token. No one's going to be able to sell out really, really quickly. So you could look just to see what the market cap is. So the market cap on the Wolf token is fully diluted. It's only 440,000 ADA. That's not a high valuation. So a bit of a risky token probably in terms of market cap. Its price action, if we exclude that initial crazy peak, is fairly volatile. It's been fairly stable through here actually, but recently it's been up and down. So maybe it's an interesting one to get involved with. And you could also look at how many people are holding the token. Actually, I don't know where that figure's here. It might be on a pro function on this platform. Then again, you can do some research on tap tools. You can also look at some of the other due diligence tools that I've talked about in the past, like ScatDAOs. I can't remember what their tool called. ScatDAO up there.
So another thing you can do is trade between the dexes. So you buy the pairing from one, and then you sell it on another. Obviously, the margin's quite small, but if you're moving larger stocks, then that's a reasonable way of making money.
Absolutely, yeah, that's arbitrage. So you can see where the price is higher on one exchange and the price offered is higher on one exchange than the other. Buy it low, sell it high. That's one way of doing it. But yeah, if you're looking at the risk of holding a token long term, I can't find that tool at the moment. Then we've been over in the past various due diligence platforms like that. ScatDAOs, what's that tool? Anyway, but then there's also Cerberus now, which is the one that we were just looking at, is getting some funding from Project Catalyst. I'm not going to find any of these things, haven't prepared them in advance, but Cerberus Labs on Twitter with them. You can find their homepage, crypto risk rating site. On that now. So you can do some research on a token here. So what was it? The wolf one we were looking at? It's not going to find. I haven't got anything on the wolf token. I think it's just too small a cap coin to really look at. So that might be your first step. So, okay, I'll only consider tokens that have actually made it onto a tool like this, Cerberus. So let's have a look at IAG. This is I've not got access to the pro features at the moment. This is a growth score high plus. Sounds like a good token. That's all the due diligence I can do on here for free. I don't know if we get any access to any of the other stats. So IAG is considered a high growth token by Cerberus. So you can then look at IAG on here. And you can see it's got a market cap of 100 out there. That's the market cap. The diluted market cap on all the tokens is 297. We've got 37% circulating at the moment. So there's a way to go to get fully diluted. And then the obviously deciding factor on which token pair to choose is based in the yield that you'll get from it here. So let's see, IAG. ADA IAG is offering 16.26 APR. So again, that's not a bad return. Another thing to look at is how much is coming from trading, how much is coming from the actual token itself, because you can you're getting some kind of that APR figure from trading, and that means that people need to be interested in buying and selling that token for you to be earning. That's a variable figure because nobody knows how much is being traded day to day or will be traded in the future. However, if you're being given an actual token as a result, so 3% of it's coming as mint tokens, that's guaranteed you actually take that to the swap platforms and trade them and get them out into ADA, and then you can send them to your centralized exchange and get them into pounds. So you might be looking for tokens. So one that I participate in is CBLP. That's at 95%. But if you look at the APRs, CBLPs, the token that you get, 92% of the earnings from that are coming as CBLP. And I know I can go to any trading platform and swap CBLP instantly, so I don't have to stake it with MYield like I did with MYield. I can swap that out into ADA, because these exchanges have liquidity of that token, and if I earn 500 CBRP, that'll give me $9. And so it's like, okay, 92% APR on a token. So I could put £100 in there and get 92% APR on it. That's not a bad way of generating some cash flow. Put £1,000, £10,000, whatever you want, depending on your appetite for risk. But that's a way of generating yield on top of your assets you've already decided to allocate to crypto, but actually cream some off all the time as cash flow. All the time maintaining your asset size, your portfolio size, which you're hoping to benefit from in the future from that capital growth rather than just on your earnings. So yeah, that's one of the strategies you can do. I hope that answers your questions.
Yeah, good stuff. Yeah, good stuff. Yeah.
Cool. So yeah, and then there's also other ways, like Paul was talking about, arbitraging between exchanges. That's another good thing to do if you're more of a you're looking to benefit from market movements, price movements, which is obviously much more involved. You have to stay on top of things on a day-to-day basis to really participate in arbitrage or trading or things like that. Liquidity provision and yield farming is a slow, low engagement way of doing it, which is useful for those who don't have all day in front of a computer, or an appetite for risking funds in trades. Yeah, all these techniques and tools are out there, and they're accessible. In the past, these were only accessible to Wall Street's traders or investment firms, hedge funds, banks. They're now accessible to you as an individual in the DeFi space. And this whole money system is something you can benefit from in various different ways. Capital growth, but also because obviously there's billions of dollars flowing into the Bitcoin at the moment. And so we're going to see a rise in the valuation of all cryptos as a result. But then also within the crypto itself, you actually earn more crypto within the crypto space as well. So all these things are things you can consider as you get into being more and more of an advanced investor. But yeah, all the time, it's good to make decisions and think about your activity in terms of the impact on the world that these projects are making. Look for tokens with utility, things that are making a difference, things like Empower, World Mobile Token. These guys are actually building stuff in the real physical world as well as in the digital. Yeah. Good. Well, that's taken us to time and beyond. So thanks for joining again, participating. It's great to have you here and engaged in learning. So we all learn together. We're all in the same journey. But hope you have good weeks. I'll see you again next week. I should be back on next week. I've got a few days away coming up, so I'll be back by then. I hope they're up to speed again. But yeah, enjoy your or hope you have a successful week. Yeah, enjoy the weekend and hope you have a successful week next week. And we'll have some results hopefully to talk about. What date is the results? It's 15th, isn't it? So Thursday, yeah. So we should have some results to talk about next Friday, which will be good. Exciting to see. All right then.
Awesome.
See you
Thanks,
all next
Jonathan.
Friday.
Thank you so much. Thank you. Bye.
Great. Thanks very
Very
much,
much.
Jonathan.
My pleasure. Dude. Bye.